Welcome back. Raymond James missing on both earnings and revenue estimates for the latest quarter. Investment banking revenue down 37, raising some questions. Joining us exclusively this morning is Raymond James CEO Paul Shoukry. Paul, it's great to have you. I mentioned the IB number. I think it sounds like it is a bit of a timing issue, is it not?
Hey, Carl, great to be here with you. The pipelines for investment banking are very robust. There are a lot of motivated buyers with dry capital and dry powder to spend, and a lot of motivated sellers. Most of our M&A activity is financial sponsor backed, and so our pipelines have been building. We're very optimistic about the fiscal year ahead in 2026, and really largely due to timing and deal slipping, the quarterly results were weaker for investment banking. But for the firm overall, record revenues of $3.7 billion. We finished the quarter with record client assets of $1.8 trillion, up 14% year over year, and fee-based assets were up 19% year over year.
So no reason to think that the banking business, the investment banking business, isn't set for an historic year, would you say, in 26?
Well, I would hope so, but investment banking is very difficult to project, as you know, and so the pipeline's strong. A lot of the ingredients are there. Financing is available, relatively attractive cost financing for deals to get done. I think maybe the one impediment is just there is still, in certain cases, a bid-ask gap between buyers and sellers. Sellers, especially if the buyers got into the market during the COVID period at really high multiples. They're now looking to sell some of those investments, and in some cases, those multiples have softened a little bit. So those gaps are converging, and I think there will be a strong year ahead for not only Raymond James, but really the entire industry has been speaking with a tone of bullishness around investment banking.
Is AI fundamentally changing the way that you guys work and empowering your advisors? And does it mean that you're not hiring as many advisors?
No, we're really focused on what we call the power of personal. So the personal relationship, especially in the financial planning business, is going to be absolutely critical, and that's our bet going forward. What AI is changing, and we're investing heavily in AI, is helping advisors develop even more deeply personal relationships with their clients in a more scalable and efficient way. Just this week, we launched an AI service tool called Ray, R-A-I, play on Raymond James, and it's basically a natural language agentic AI model where you can ask any question related to client accounts and get answers directly. So you don't have to call in or even search on our search database. You can get more information at your fingertips in a much quicker way to service your clients and spend more time on the personal relationships and less time on the administration. But we're still in the first inning of AI. I think the entire corporate America is still in the first inning in AI, but the opportunities ahead of us are significant.
The dollar numbers that you spend on investments like that, is that going to rise in the next year, the year after that? Any reason to think that would flatten out? Or are you talking about second derivatives of growth?
Absolutely. We're looking to spend about $1.1 billion on technology this year, which is up 8% over last year's technology investment. But if you look at within that, the investment in AI, it's up multiples of that 8%, off of a smaller base, of course. But yeah, we are going to continue to rapidly expand our AI investment to help advisors develop better relationships with their clients, but also to help the service areas develop more scale in their operations as well, so we could do more with the same number of associates.
So ultimately, how do you see it changing the business? And just your own and the entire industry?
Yeah, for example, when we say the power of personal, how can AI help an advisor develop even more personal relationships with their clients? We have the next best action, which is a tool that, based on all the data that we have on the clients, advisors can very quickly prepare for a meeting based on the notes from the prior, in the CRM from the prior meeting, what the follow-ups are, come up with some next best recommendations for things to look at, whether it's estate planning, tax planning, 529 investments, et cetera, and really have a tailored meeting enabled, much more personal, but enabled by AI and technology.
But is that higher growth for you? I mean, it's obviously more productivity for your people.
Yeah, so That's what advisors are asking us for, and even investment bankers, they're asking us for, help us use this AI to spend more time with clients and prospects so we can bring in more assets. And that's exactly what we're doing, which should not only drive higher productivity, also in the aggregate drive higher growth as well. And having a differentiated platform, I said we're investing $1.1 billion on technology a year. A lot of our competitors, the private equity-backed competitors, smaller regional competitors, can't afford to spend that, and so we're becoming a destination of choice. Just this quarter, our annualized net new assets was 8% this quarter, the highest in the industry for anyone who's reported so far. And a large part of that, most of it's the culture. They see Raymond James as a destination of choice for the culture, but the technology and the AI investments that we're making, when they come in, they're blown away by the capabilities here versus those other firms who just simply don't have the budget to invest in technology to that extent.
Sarah mentioned employment. I mean, it seems like the tone from a lot of financial services when it comes to AI and headcount is it's not going to mean layoffs per se, but we think the business can be much bigger in 5 years with a comparable set of employees. Does that seem fair?
Yeah, Carl, that's the focus right now, is to just do more with the same number of employees to make employees more efficient. We're a growth company, so if you look at our budget for the next year, we're actually looking to grow headcount again, and we've been consistently growing headcount. But what we want to do is bend that curve where we don't have to grow support count as much as we're growing revenues and advisors and bankers. And so that's what we think AI will help us do.
Paul, appreciate it very much. Fascinating quarter. Amazing where we are in this trajectory. Thanks for coming on. Paul Shoukry.
Thanks to you both, Sarah, Carl. Thank you very much.